Hi, this is Sherron, the Modern Savvy CPA, continuing my financial literacy series with the top 10 most important topics when you're thinking about financial literacy. Today, we are going to cover taxes, the all important taxes. So, since this is my specialty, we're not going to have a guest for this topic. The last three topics we had a guest, and I hope that you guys are enjoying the change up a little bit, having someone that's an expert that talks about the myths and educating us a little bit more on the things you need to know about debt, credit, home building, investment, etc. We will continue with some other guests with our other topics in once we continue with the series. But since today we're talking about taxes and I'm a tax CPA, you're gonna have me for these two videos. So let's talk about taxes. Taxes may be one of the most dreadful part of managing your money that when you're thinking about things. But it is definitely necessary, and it needs to be part of your overall financial wellness, financial literacy awareness. You definitely need to understand taxes. You do not need to be a CPA or a tax accountant or a specialty in taxes. But like every topic that we've covered so far, and the topics we're going to be continuing to cover on our financial literacy series, you need to understand the overall topic. You need to understand the overall being about taxes, how it affects you, and the important parts that you need to know, and where you are going to need to hire someone to educate you a little bit more. As we continue this part, I would like to definitely tell you guys knowledge is power. So continuing to listen and to watch on our financial literacy series will definitely empower you with the knowledge to control your money and not have your money control you, and figure out the way to live the American dream no matter how much money you make, making sure that you're keeping the most that you can. So just so you understand, taxes is just, they say there are two things that are definite: death and taxes. Well, even in ancient times, taxes was part of our culture. So taxes is not something new. It's something that the pharaohs and the people of ancient times also had to deal with. So it is part of our life. It was part of our life then. It's part of our life now, and it's something that we need to continue and we need to educate ourselves about, so we know enough to make sure that we are doing the best for ourselves. We understand and are not surprised with things within our budget. So knowledge is power, meaning your understanding of things is what gives you the power, to plan properly. And once you plan properly, you are not surprised on things, and your budget, your financial outlook will be something that you know of, and you can plan properly for it, and there are no surprises. And that's the main part of what we're trying to teach you here, is all about the planning for things. So definitely taxes is not an option. It wasn't an option in ancient times, and it's not an option in today's world. There are different things that you need to understand. You need to understand that taxes is a civic duty to pay for when you are a citizen of whatever territory you're from. It's part of your civic duty. Understanding that will minimize your stress and pain when it comes to financial and emotional thoughts about taxes. You don't have to be a tax expert, like I said, but it is important for you to understand how much taxes you pay each year, or an overall estimate of how much taxes you pay each year, whether you're required to file a state tax, a federal tax, or a, whatever income tax that you need to file. Taxation is a responsibility. So you need to make sure that you understand that it's a responsibility. It's our social responsibility, and they will come and get you eventually. So you definitely need to keep up with your social responsibility in the culture we live in today. I always say, another little tidbit that I always say, nothing is for free. If you don't pay it today, if you don't pay for it today, you'll pay for it tomorrow. If you don't pay for it tomorrow, your neighbor is going to pay for it. And sometimes you're the neighbor that's paying for it. So you just need to make sure that you understand that everything catches up with you, and you want to make sure that you do the best in following the rules of your society, but you don't have to give Uncle Sam every penny that you got. You want to make sure that you're maximizing your deductions and your credits in order to be able to minimize the amount of tax that you pay. So, you need to just understand the civic duty. Why understanding tax is important? Understanding tax is important because, like I said, if you don't understand, you could miss deductions, you can miss credits, you can miss so many things that you need to understand about if you're not aware of it. They say that, almost $1 billion every year is left on the table because people are missing deductions that they should be getting, and you're giving the extra to Uncle Sam. We're always hearing about people that are cheating the tax system. Yes, there are people that do that, but there are also people that are not literate enough about the taxes that they do, and they're not educated enough. They don't have enough knowledge about it, and they leave almost $1 billion on the table every year. That's about $400 per household in the United States, that we're giving to Uncle Sam that we shouldn't be giving. So you need to make sure you're aware. Knowledge is power. So, understanding your taxes will save you money. It will save you work, in the long run, because you want to do your work before and not after. It's less when you do it before than when you do it after. So understanding how taxes work, how to help you save, can help you with your child care. There are many things that you can save on with taxes. Getting to work. There might be commuting credits that you can get in your state, depending on your state. The child care is another credit that you can get. Pre-tax deductions from your paychecks is another thing that you need to understand. So understanding it will help you to budget better. Budget better so you know what your monthly and your liability is. You are not surprised when you do your taxes at the end of the year and you don't understand why your tax is so you owe tax that year, or you understanding that your withholding is important part of understanding your taxes. So let's go on to what taxes is. What kind of taxes is, percentage, things like that. So taxes depend on your income. So it could be earned income, it could be passive income, which is real estate income, or income that you are a passive partner in certain things. It could be anything that has to do with that type of thing. So you can go from the lower 10% tax rate, up to the 37% tax bracket. So it's a marginal tax rate within the United States that goes from 10% to 0% to 37%. So, you want to make sure you understand your bracket, where you're supposed to be, if you're married filing jointly and your income is different between you and your spouse. If your spouse is making $50,000 and you're making $400,000, likelihood you're going to have a tax liability at the end of the year because your spouse's tax bracket is much lower than your bracket, and they're withholding at your spouse's level for hers or his. So you want to make sure that you're planning properly, you understand what your overall marginal tax bracket is so that you know that you're withholding properly. It's not a big calculation to understand that, but it definitely helps to ask your tax preparer, your CPA, your EA, what that is so you can understand what's happening. Just don't sign here and call me next year kind of thing. Ask questions, because it's important that you're educated about where you are, and ask questions even when you're getting a refund. I get the most questions asked to me when you're not getting a refund, when people are owing taxes. When they're getting a refund, they don't ask questions. So, but you still need to ask questions. What are my bracket? If your income needs goes up a certain amount the next year, when you have children and they're aging out of becoming your dependents, when you buy a house, every change that you have within your family, within your economics, it affects your taxes. So you definitely ask questions. There are a few things that you need to definitely ask questions for. Ask about tax credits. Essentially, a tax credit is a big deal. It's one of the most important things that you need to look at, the most beneficial things that you need to look at. It's an incentive that the government gives to taxpayer in certain different levels that helps you to, with your situation depending on what you are. One of the biggest tax credit is the child tax credit. Another tax credit that we have out there is, the education credit, the American Opportunity Credit, which is for college students. When you have a college student, you want to make sure you talk to your accountant or your CPA as to, who is the dependent. If your college student pays more than one half of their support, are they able to file as the dependent for themselves, or are they still your dependent? Your person needs to analyze which one it really is, because if they're still your dependent, you're the one that gets to take the American Opportunity tax credit, and it might be most beneficial for you to be the one that does that. So make sure that you ask that question. People think that it's 1, 2, 3. Maybe the simplest thing to do might be a W-2, but soon as there's a small change that you could make or break a refund that you could be getting, or understanding things if you're not asking questions. Also learn about deductions. Not because you're not itemizing, because since 2017, since they raised the itemization, most people are not itemizing. One, the real estate, the interest rate was so low, so our mortgage interest is less. They minimized the deduction for tax paid, whether it's income tax, sales tax, or property tax, to $10,000. So a lot of people are not itemizing, but that does not mean that you shouldn't talk about deductions. For example, there's your student loan interest deductions. Depending on your income bracket, you're able to deduct up to $2,500 of your student loan interest as an above the line deduction. When someone tells you above the line, it's a special deduction. It's a more preferential deductions. Not all deductions are treated the same way. So if you ask your tax accountant or your CPA or your tax preparer, can I deduct something? That's a super loaded question, because can I deduct something doesn't mean that it's going to be beneficial to you. Yes, you can deduct something, but is that deduction going to be beneficial to you? There are many things that we can deduct, but is it going to be beneficial to you? Itemized deductions is one kind of deductions. If you qualify for it, then it might be beneficial to you. Above the line deductions are preferential deductions. For example, like I said, your student loan interest deduction. There's also your IRA deductions. There's also your HSA deductions that are all above the line deductions that are preferential deductions, better than an itemized deduction. So not because you're not itemizing doesn't mean that you are not able to use deductions. So you need to ask your questions. You need to make sure that you have an overall understanding of what you're doing, and we need to emphasize that, even if you can't pay your taxes, the next thing is to make sure you file your taxes. Make sure that you file your taxes when it's due. The penalty for failure to file and failure to pay can, if you do as much as you can right and as much as you can afford to do, then it'll minimize what your penalties are. So make sure that you face the least amount of repercussions as possible. Always talk to the IRS. If you can't pay, set up a payment plan. Once you are always communicating with them, they're not going to put repercussions on you like that really quickly. But if you're ignoring their letters and you're ignoring the things that you need to talk about, they will put repercussions on you. They will seize your passport. They will, force you to comply with regulations. They will levy things. So you want to make sure that you're always talking to them. You want to make sure that the IRS minds your business. So you want to make sure that you mind your business before they do. So if you're talking to them, if you're making a payment plan, you're doing what you can afford, and you're always communicating with them, there aren't going to be any drastic measures that comes about with you. But if you ignore them, then they will start minding your business a little bit more. So make sure you do as much right as possible if you find yourself in a bundle of a little trouble. So make sure you do that. Tax brackets changes. So you want to make sure that you understand, that the difference between the tax brackets. Make sure that you understand which bracket you're in. You don't need to understand the calculation exactly, but asking what bracket you're in, what your marginal tax rate is really important. Make sure that you're e-filing as much as possible. One, it's less information mistakes. You get your refund faster. It's, you save a lot of paper. We don't want to have to destroy any more trees that we're destroying right now. So you want to make sure that you are e-filing and you're saving your receipts in PDF form. In today's society, the receipts that we look at, I don't even keep those receipts. I take a picture, put it in my virtual shoebox, and that's how I keep my receipts. Because if I look at it a week or two later, especially if I left it in the car somewhere, I don't know what I bought. So, it's important because it's all faded. So the IRS accepts PDFs. So make sure that you're keeping the important receipts that you need to keep, somewhere where you can keep PDFs or pictures or JPEGs or whatnot. If there's a chance that you might get audit, don't be afraid of audits. Because if you're doing your stuff the best you can, then an audit sometimes gets triggered with maybe some type of discrepancy within the computer. Don't stress over it. A lot of the times it's paper audit. They're just asking you for one thing, one question. That's why it's important to save your receipts. So you want to make sure that, if you are subject to an audit, you address whatever the gap is that they're talking about, and you understand your finances, and you explain to them whatever they're talking about. For example, I have a client that always itemizes, and he's a gambler. He gambles a lot. He always tells me, okay, I'm not going to gamble as much this year. So of course, the one place that we never win is when it comes to the casino. We might win $1 million, but we always are in the hole. So he's been my client for a long time, and no matter what it is, no matter how much millions of dollars he wins, he's always $200,000 to $300,000 down every year. So he gets to deduct the gambling losses, but only up to the gambling winnings, and it is an itemized deduction, so it's not preferential and it's not considered the same. So he got audited one year because of that and because of his charitable deductions. The tax return, the letter came, they asked for what they asked for. I sent it back with the notice and all of his receipts, and he got his stuff. It came back and everything was fine. Even though it was hundreds of thousands of dollars of itemized deduction, we explained it. It triggered an audit. We explained it. It was good. When I do tax returns, when I'm taking positions, I make sure I have whatever my position is before I'm asked the question. So whenever a question comes about, I have my answers already, or I've told my clients, okay, this is the situation, this is the situation, this is the situation. This is a potential red flag, but if you have all your information and the red flag comes back to us, we're able to answer the question. So an audit is not necessarily meaning you're doing something wrong. It just means that, there's something in the system that's triggered, and we're able to answer that question when the question comes. So if you're doing everything that you're supposed to do, you sleep at night anyway, you're good. I like to sleep at night, and I don't like to do it in a jail cell. So definitely you want to make sure that you're doing what you need to do, and you have all of your backup just in case you're asked. So, and you definitely want to make sure that you are talking, filing your taxes is important that you look at, get a professional to do it. Make sure you're getting tips. Make sure certain things are complicated. Make sure you're understanding and you're following the right people's advice. Not because somebody's on social media or somebody's whatever giving you advice. Vet them before you take their advice. I hear too many things that people talk about, and it's just like, where did you get that information from? That is totally, or it's on incomplete information. The amount of incomplete information that is given as tax advice is unbelievable. You want to make sure that you get complete information. And the only way you're going to get complete information is if you speak to a professional that is seasoned and experienced. If you're listening to people on social media, or you're listening to podcasts, or you make sure that the person you're listening to is qualified to give you tips on these things. Make sure they have the right experience and the right licensing. There are too many people out there giving advice. There are too many people that were listening, and not because it's on there, it is the right thing. So make sure that you're definitely listening to what's out there and listening to your information on. If you're getting information from that, you're definitely listening to the right people. You're vetting your people. So, it's okay for you to hire the right tax professional to help you. You want to make sure that, you're looking at the right person to help you. Some of our returns are not as complicated. Some of us are very simple when we start out. We're employees, and we just have our employees. Then we buy our houses, and we things like that. Then we have additional schedules. So for individuals, we have our main tax schedule, which is called the Form 1040. The Form 1040 is pretty much a summary of all the schedules attached to it. So I've had people's tax returns that are like 300 pages. So it all gets summarized in the end to their 1040 and the schedules attached to their 1040. So the person with 300 pages gets summarized to that 1040, and the person with 10 pages gets summarized to that 1040. So it depends. Everything gets summarized to that 1040, but there is the complication of your tax return, or the way the tax return works is you add schedules to that. So depending, if you have a rental property, you need to make sure that you're educated about your rental property and tax laws regarding rental properties. If you are investing in the stock market, you want to make sure you understand what realized gain is and unrealized gain is, and how it affects your tax return. If you're have a small business or a side hustle, and you're a Schedule C, which is a sole proprietor, or a LLC that's a single member, you want to make sure that you understand all the rules that has to do with that. You want to make sure that if you are a highly compensated employee, and you have some of these things, you might not be able to deduct some of the losses that you have. So you always want to make sure that you keep copies of the return. If you're changing your tax preparer, and you want to there are things on your return that affects the year, the next year, and the next year. So there might be carryover information that needs to be put on your tax return the next year, so it's carried over. There might be losses that you're not able to benefit from in the current year that needs to be carried over to the next year. So you need to make sure that you are looking at all these things. And it doesn't take a lot to make a tax return go from super simple to super complicated. And, as time goes by, today, more and more are investing in the stock market, or investing in crypto, or I have a client invested in NFTs. Oh my gosh, I'm dying with the NFTs, understanding the NFTs, but it's part of what I'm doing, part of being a tax preparer, part of being a tax accountant. So I need to understand those things. So years ago, hardly anybody had a broker statement or had dividends. Today, if you are investing in any type of securities and exchange, you potentially have income, whether it's dividends or interest income that's spit out from your broker, whether it's Robinhood or TD Ameritrade or Fidelity or whatnot. Even if you don't sell any of those taxes, you might have dividends income coming up there. So you need to make sure that you print that 1099 and you let your tax preparer know that you do have a small broker account or an individual broker account. So, today we are doing more things that used to be what rich people did before. So our tax returns can be a little more complicated. So we just need to be aware of what we're doing and how it affects us financially, where it affects us financially. We need to understand, where it affects us tax-wise. If you sell securities at a large gain, you need to make sure that you let your tax preparer knows that, because that is a taxable event. When you realize any type of security, realize means you sell it, then it's a taxable event and it needs to be on your tax return. If you sell at a large loss, you still need to have that on your tax return, because you're able to deduct some of those losses in the current year and you're able to carry forward some of those losses into the future years. So when you think something doesn't matter, it really does. So you need to make sure that you're asking questions. Ask your tax preparer to give you an organizer, because there are questions on there that triggers what questions they might need to ask you that you don't know about. Remember, they're not mind readers. They don't know what's happening with your taxes unless you let them know and you ask leading questions sometimes, so it triggers more questions for them to ask you. The way that you do that is educating yourself about your financial picture, educating yourself on what's happening, educating yourself on the things that you're doing, so then you understand what questions you need to ask. So that's in a nutshell what an individual needs to understand about their taxes. They need to understand the overall being and how it affects them. So the more complicated your tax return is, the more things you're doing, the more schedules you have on your 1040, the more you need to look into the different parts. The tax code is super, super large. I mean, it's a book and they're wanting to make it a bigger book. So there are so many parts that can affect you. And, the more you grow, the more you get into things, the more you do businesses, then the more complicated things get and the more your complicated your tax return gets. But that's also the more when you can miss pertinent deductions and pertinent tax credits and pertinent information that needs to be on your return now or later that can help you, make sure that you don't be a part of that $1 billion that's left on the table from missed deductions or missed credits that's happening. Again, this is Sherron, the Modern Savvy CPA, talking to you about taxes, which is definitely part of our financial literacy package. Make sure that you continue to listen on our next topics. We are about halfway through going through our 10 topics, and we're definitely going to come to you the next time with some more financial literacy hot topics. Please, if you like what I'm doing and I'm talking about, listen to my podcast. Follow me at The Modern Savvy CPA on YouTube, Instagram, Facebook, and TikTok. And make sure that you like and comment on anything that you would like to talk about in the future. Thank you.